Will Chicago's housing market boom in 2026? And could we see home prices go up double digits in certain neighborhoods across Chicago's metro housing market? If you're a home buyer or investor in Chicago, you got to pay attention to this market because some crazy things are happening right now. First things first, if we look at data on Reventure app, we can see that values in the Chicago metro are up 3.5% over the last 12 months. So there's continued appreciation, and that this appreciation has held firm the last 3 years through the housing market recession in America, with the typical home value in the Chicago metro now increasing to $337,000, the highest on record. However, there's big difference in price point depending on the city and zip code you go to in the Chicago metro. Further to the north, we have some expensive suburbs here near Highland Park and Northbrook. Further to the south side of Chicago, it gets cheap, and then it's a mixed bag when you go to the west. And the surprising thing about the Chicago metro is how resilient the housing market has been. We're in a national housing recession right now. Buyer demand nationally is at its lowest level in 30 years. Prices are now going down in almost half the US. In states like Florida, they're collapsing in certain areas, yet in Chicago, prices keep going up. And why is this the case? And if you're a home buyer or investor entering 2026, what should you do? Should you jump into the market in Chicago? And should you buy sooner rather than later, or should you wait? Well, to answer that question, I look at the home price forecast that we have on Reventure app. It's a 1-year price forecast. And this price forecast is going to help you understand the areas of Chicago's housing market that are going to go up versus down in the next 12 months. And the one thing you can see is that most areas have a really positive forecast, especially in some of these wealthier northern and northwestern suburbs. We think values could go up as much as 10% year over year in an area like Arlington Heights. This market is a huge seller's market. There's no inventory, demand still strong. And on a lot of these houses, there are still bidding wars, lots of activity, lots of views and saves on Zillow. One thing you got to watch out for, everyone, buying in Chicago and buying in Illinois, are those property taxes. You can see on a house like this, the property tax bill is $10,000 a year for a house which is $540,000. And this is one of the negatives of buying in Chicago. One of the negatives in buying in Illinois is that your property tax bill is going to be really high. It's some of the highest property taxes in the US. Data on Reventure app says that the average property tax rate in and around Chicago is almost 2% in certain zip codes and neighborhoods, 2% of the value of your house, which is something that could eventually be a headwind in the market down the line the next 2, 3, or 4 years. If these property taxes keep going up as the home values go up, eventually buyers might say, I don't want to buy in Chicago anymore. For now, that's not happening, everyone. If we actually take a look at the markets that Reventure app has the biggest 1-year price forecast on, we can see that Chicago is in the top 10. Chicago's metro forecast is plus 6.1% for the next 12 months. That's in the top 10 in the US, everyone. So despite the high property taxes, we're still going to have appreciation in Chicago in 2026 because the inventory is just so low. When we look at the inventory metrics, we can see that in the Chicago metro, there's only 17,000 homes on the market for sale. That's actually less than it was last year. So inventory is down year over year, and it's down about 60% from where it was prior to the pandemic. So long as this inventory in Chicago's metro keeps dropping and not recovering, we're still going to see that upward price forecast. You can see plus 6.1% here on our Reventure price forecast score for the Chicago metro, one of the highest in the US. So we're still bullish on Chicago, everyone. I know I have a reputation for sometimes being bearish on the housing market. However, the data is very clear. You should buy in Chicago. Like if you're thinking of buying now or a year from now, if you wait a year, it's going to be more expensive than it is today. However, folks, there's some pretty big differences in the different counties around the Chicago metro. We got Cook County, we got DuPage County, we got Lake County, Kane County, Kendall County, Will County, even part of it. I think Lake County, Indiana is actually technically part of the Chicago metro as well. This is a big area, everyone. In the Chicago metro, we have a population of 9.4 million people. So big city, big metro area. Despite the area losing some people during the pandemic, its housing market is still holding on strong. And if we look at those migration trends under investor metrics on Reventure app, we can see the Chicago metro lost 45,000 people in 2024 due to outbound migration. you can see Chicago actually always loses people due to outbound migration. Every year since 1991, Chicago has had a domestic outflow of Americans leaving the area. More people leaving the Chicago metro than moving in. However, what do you notice is that the outflow in 2024 of minus 45,000 was actually one of the lowest outflows in Chicago's history, going back 35 years. You can see during the pandemic, the outflow was really big in 2022. Now it's at one of its smallest rates on record at minus 0.4% outflow. And the way to think about this, everyone, is that Chicago is not a growth market in terms of population and demographics. It hasn't been for the last couple of decades, and it likely won't be for the next 5 to 10 years either. But the reason that real estate keeps going up despite that is due to the lack of supply and inventory. So while Chicago might lose some people, its overall population might stay flat or go down a little bit, the housing market still appreciates because the people who do live there have lived there for decades and often don't sell their home. They, often keep their home for decades and decades. They're local people in and around Chicago. They don't really move, and they don't build enough homes. That's the other side of the equation. It's a high population density area in and around the Chicago metro, and there just isn't a lot of room for building, and a lot of home builders, quite frankly, don't really go to Illinois and Chicago, especially the big national ones. And so you're going to have this constriction on supply across the Chicago market. You can see here we added a data point to Reventure app. It's really helpful for you guys in figuring out how much inventory there is. It's called inventory as a percentage of houses. So in the Chicago metro, there's 2.4 million homes that are owned by homeowners and absentee owners. 2.4 million. Of those homes, 17,000 roughly are on the market for sale. So 0.6% of all the homes in Chicago are on the market for sale. Now let's compare that to another area, folks, another bigger city like maybe Nashville. In Nashville, you could see 1.9% of all the homes are on the market for sale. So in Nashville, there's literally 3 times as much relative inventory as Chicago, or maybe compare it to Atlanta. In Atlanta, there's 1.7% of all the houses listed for sale compared to 0.6%. So these Sunbelt markets that a lot of people from Chicago have moved to in the last 5 years, Nashville, Atlanta, maybe Dallas, they have almost 3 times as much inventory on the market relative to their number of housing units, which is why home prices are going down now in Dallas, in Atlanta, in Nashville, but still going up in Chicago. The other thing I want to look at for you guys in terms of Chicago is the rental market, because understanding the rental market is really important for also understanding where the for sale housing market's going. Like if you're looking to buy a house or investment property, you should ask yourself what's happening with rents, because rents are going to help determine how many buyers are going to be there in a year or two. They're also going to help determine how much money you can make by buying an investment property. And one really interesting thing about Chicago is that the rents keep going up. According to data from RealPage, a company that tracks U.S. apartment prices, we could see that in Chicago, the rents for apartments are up 3.1% in the last 12 months through October 2025. That is the 4th strongest rent growth for any metro in America. So not only are prices continuing to go up in Chicago, rents for apartments are continuing to go up. And if we actually look at data from Invitation Homes, who's the big Wall Street landlord, they own 2,400 single-family homes in Chicago. They're showing some crazy rent growth, everyone. They're showing 7.2% rent growth on renewals for single-family homes in Chicago and 10.7% rent growth on new leases. That's crazy, everyone. 10.7% rent growth on new leases in Chicago. Comparatively, all across Florida, new lease rent growth is dropping. In Phoenix, new lease rent growth is dropping. But in Chicago, it's going up double digits, which is another reason why Reventure is giving this market a buy for 2026. Prices are going to keep going up in Chicago next year. Rents are going to keep going up as well. There simply isn't enough supply on the market. The question is, how much are values in your zip code going to go up over the next year? And there's maybe also a couple zip codes in the metro where they might go down. You're going to want to know the answer to that question as a home buyer or investor before you purchase next year. So what you should do right now is head to www.reventure.app. Here's the homepage. This is the website. You're going to want to unlock that home price forecast for your area. It's a forward-looking 12-month forecast, going to let you know where values are heading, how much are they going to go up over the next 12 months, depending on where you are. Like I said, there's some zip codes we think are going to go up 10% based on the shortage of inventory, the resilience in demand. Head to www.reventure.app right now and sign up for that premium plan, everyone. It's only $49 to get access to this forecast, which could end up saving you tens of thousands of dollars in 2026.